recording is now on. So welcome everyone. Hello guys, this will be today's backtesting session, and I generated the number 14 for the backtesting, and this will be the backtesting of 14th of January in New York session. So as you can see, I've already prepared the chart for the 14th of January, 1 hour before New York session opens. And let's analyze the chart on the 4-hour chart firstly. Okay, this range is pretty similar to us, right? We've been in this range for a month. We talked about this range several times, and finally, the range has been broken. As you can see, price at the upside liquidity from the range with this movement. And let me just mark up the supply and demand zones. So as you can see, price is currently in this region. We have to find the matching supply zone for this region, which will be this one up here. As you can see, here's a perfect supply zone. Price was reacting on this supply zone. Here was a reaction, the 15-minute chart, I believe that will be a cleaner reaction. And after the reaction, the supply zone has been broken, as you can see. And actually, you can call this a liquidity sweep to the upside too. Here's the liquidity. Here's the first tap, second tap, third tap. And basically, this is part of the liquidity too. And this movement swept the liquidity and broke above the supply zone here, as you can see. We can mark demand zones out also. Let me just zoom in and focus on this region. As you can see, we have this demand zone right here that was leading to a break of this supply zone. So this will be a pretty valid demand zone for us because it created inefficiency, as you can see, to the upside, swept the overall liquidity, broke the supply zone, broke structure. So it's a pretty valid 4-hour demand zone. But this demand zone could be liquidity considering the inefficiency below and considering the overall trend, which is still extremely bearish in this case. As you can see, we talked about this several times. So our trend is still extremely bearish. Just look at the pattern. Look at the pattern. Price is creating huge downside movements, reacting on supply zones, continuing the huge downside movements, reacting on supply zones, continuing the huge downside movements, reacting on supply zones, and expectational continuation of the huge downside movements. So expectational continuation of the bearish order flow in this case. We already know that the order flow is bearish. Just simply looking at this chart, right? It's pretty bearish, always reacting on supply zones, respecting supply zones, breaking through demand zones. So our overall structure is still bearish. This movement could give price enough liquidity sweep from this region and enough reaction to continue the bearish movement. Let's see how price reacts on this supply zone. And we can mark more supply zone, demand zone out, which will be this one in this case. This will be another valid demand zone because, as you can see, this demand zone was leading to a sweep of this range. This demand zone swept the overall equal highs on this range. As you can see, it swept the equal highs with the inefficient movement to the upside. It actually changed character to the upside here at this tap point because this tap, let me just point it out. As you can see, this was the last structural high point in this range, and this was the last structural low point in this range. And as soon as this high point breaks, that will be a change of character to the upside. As soon as this low breaks, that will be a break of structure to the upside. So price was moving in this range since the end of November. This is just a range. Price broke above this range, as you can see here with this candle. So basically it changed character to the upside with this candle. And that, after changing character to the upside, it immediately changed character back to the downside here, as you can see, because this was the last demand zone that changed character to the upside here. And this movement changed back character from demand to supply. So basically that means this movement, so this demand zone was reacting on this supply zone, and from this demand zone, price swept the range and changed character back again. So demand is in control in this region, but price stepped into the supply zone, supply took over control from demand, had a reaction, but after this price broke above the supply zone, so demand was fully in control. So basically if this demand zone breaks, price will head down to this demand zone. If this demand zone holds, we will see higher supply taps, which will be this one in this scenario, because as you can see, this is a perfect weak zone. This could be a higher supply zone tap. So let's just mark it out. And it's pointless to mark out more supply zones. Just focus on the most recent ones. Always focus on your most recent zones, and it won't confuse you. If you're marking out too much supply or demand zones, that will confuse the hell out of you, right? Just keep your chart simple, keep your analysis simple, and that's it. Mark out the most recent 4-hour zones, mark out the most recent 15-minute zones, mark out the most recent 1-minute zones. This is all about. Okay, so let's continue. Let's switch to the 15-minute chart and just zoom in. As you can see, This was the 4-hour zone. Let me just zoom in a little more. This was the 4-hour zone that was leading to a break of this 4-hour demand zone. We can actually refine this zone perfectly on the 15-minute chart. As you can see, this zone is the 15-minute refinement of the 4-hour zone, because from this candle, the huge inefficient push started, the liquidity sweep started, the break of structure started, liquidity creation, everything was leading to this demand zone, this 15-minute demand zone. But you still have to treat this demand zone as a 4-hour zone, right? So if you need a change of character, I mean, if you're waiting for a change of character after the tap of this zone, you still have to wait for a 15-minute change of character, because you're still treating this zone as a 4-hour zone, right? We just refined this on the 15-minute chart, but you still have to treat this as a 4-hour zone. You need a 15-minute change of character on this demand zone, or you need a 15-minute break on this demand zone. So if a candle closes below this demand zone, that will be a break of this demand zone. A 50-minute candle, I'm talking about a 50-minute candle. So if your 50-minute closes below this demand zone, that will be a break of this demand zone. If a 1-minute candle closes below this demand zone, that will be a liquidity sweep, because as you can see on this line, let me just mark up, we have lots of liquidity sitting just below the zone. So this is liquidity built below this zone. So once again, if a 50-minute candle closes below this zone, and let's say sweeps the liquidity, but closes below this zone still, that will be a break of this zone. If that 50-minute candle just wicks below this zone, sweeps the liquidity, and closes above this zone, this demand zone, that will be a liquidity sweep, and we can expect the continuation of the whole order flow. Is it clear? Is it clear yet? Can you follow me? Just a quick feedback.
Yes.
Yeah.
Okay, perfect. So, where was I? On the 15-minute chart. Okay, let me just mark up the last recent 15-minute supply zone, which is up here. Basically, this was the last recent supply zone that was leading to a break of structure to the downside. As you can see, here's inefficient movement. This supply was caused the break of structure here, a liquidity sweep from this region. Basically, there's a triple bottoms, first, second, third bottom. And this supply zone was leading to a break of this structural low point and the sweep of this liquidity line. So this is our last recent 15-minute supply zone. If we are waiting for a 15-minute change of character after a tap of this zone, we will need a break. We will want to see the break of this supply zone and the breakthrough of this supply zone and the reaction on this 15-minute demand zone that was leading to a break of this supply zone. If a 1-minute change of character happens on the 1-minute chart after a tap of this zone, that won't be enough. We definitely need a 15-minute change of character. That's pretty important, okay? So we talked about the liquidity sweep, we talked about the supply zone. All we have to do is switch to the 5-minute chart and refine this zone on the 5-minute, and there will be a fine refinement. As you can see, this is a pretty nice refinement on this candle. We refine this zone almost to half the size. So this will be our 5-minute zone. We will need to see a break of this supply zone in order to continue the bullish order flow. Okay. All we have to do now is play price forward, because as you can see in this region, all of the liquidity has been swept, all of the liquidity pool has been filled up. All we have to do is wait for the bus. This is our bus station. All we have to do is wait for the bus to come in our station and give a reaction on our station. The first scenario will be price sweeps the liquidity, closes above this demand zone and the continuation of the bullish order flow. Second scenario, price sweeps the liquidity but closes below this demand zone and the continuation of the bearish order flow. And third scenario is price just leaves the liquidity right here, reacts on this demand zone and breaks through the supply zone and continuation of the bullish order flow. But let me just point it out that I'm still pretty bearish on this chart. I'm still pretty bearish because our 4-hour chart or 15-minute chart or 1-hour chart, every single time frame is still bearish. The higher time frames basically are bearish. Okay. You can just simply tell by looking at the chart, right? And what do we know about ranges? This is one more important thing. What do we know about ranges? This is a range. If a range high is being swept, what will happen to our range low? Just type it in the chat or answer in the microphone. What do we need to wait for?
Also be swept.
Downside is sweep. Yes, exactly. If a range high is being swept, then the range low will be swept also. This is basically a rule in every single time frame. You can just find a couple of examples for this scenario. Every single range is being swept sooner or later. But if the highs are being swept, the lows will be swept also. This is the AMD pattern. We don't talk about this in this mentorship. So let's just continue the 15-minute chart or the 5-minute chart and take a look at if every single zone is being marked up. Every single zone is being marked up. All we have to do is focus on either of this zone or either of this zone. That's all. All we have to do is wait. Switch to the 1-minute chart. And let's see what happens. Let me just close these zones a bit because they are too far away. And session opens in exactly 1 minute. Let's see what happens. Oh, okay. We have to talk about the lunchtime zones also, as you may know. And if I take a closer look, this zone, this 5-minute zone, I can refine it on the 1-minute too, but this 5-minute zone is inside of the lunchtime, right? Can we just open a position on this zone? Can we trust this zone? I'm asking you guys.
No, that will be taken out.
That will be taken out. Why will it be taken out?
Because it's just liquidity.
Exactly. It's just a liquidity because every single zone that was created in the lunchtime, so basically between 1 p.m. and 2 p.m. in Hungarian time, basically every single zone that was created between this time window or inside of this time window will be liquidity. They will be liquidated. So as you can see, we have a clear zone up here. And this zone has liquidity just below it. Here's liquidity, here's the liquidity, here's liquidity. This zone is liquidity for this zone. So we will be waiting for a break of this zone. If this zone breaks, that will be a clear confirmation in the reversal of the trend, and we will be expecting the order flow to be continued to the upside. So this is the expectation order flow to the upside if this supply zone breaks, because this zone is part of the liquidity zone, the lunchtime rave zone. This zone is part of the lunchtime rave zone. This zone is not part of the lunchtime rave zone. So basically, these zones will be broken. The only zone that will be able to hold price will be this one. If this zone will be able to hold price and can give a reversal, then the continuation of the order flow to the downside, the bearish order flow, will happen. But if price breaks above this zone, the continuation of the bullish order flow will happen because this is not a weak zone. This is a valuable zone. Okay, so all of our zones are set up. All we have to do is wait for a good confirmation, wait for a good tap, and wait for a good reaction. That's all we have to do right now. Let's see what happens. And sorry, one more thing, we have to check the news on Forex Factory because you still have to check the news when you're backtesting too. Not just in your live trading sessions, you have to check the news when you're backtesting too. Every single backtesting session, you just have to check the news. Okay, so which day is it? 14th of January. Where is it? 14th. Apply settings. So on this day, actually, there will be high impact news, as you can see. 30 minutes before the session starts, there will be 2 high impact news. So we can't really trade until 2:30. So we can't really trade until this point. There will be the high impact news hitting, and basically there will be huge reaction. So we have to wait. I will just play price forward. Let's see what happens. Price built up liquidity for this fake zone, as you can see. News will hit in soon. Tap of the zone. Let me see. That wasn't a tap. So tap of the zone hasn't happened yet. Okay, news hit in. Wow. High impact news, okay. The tap of this zone has happened, as you can see, and it did hold. It did hold yet, but we are aiming for this upper zone, as you may know. If this zone breaks, then we'll be aiming for longs. If this zone holds, and if a 50-minute candle closes below this demand zone, we will aim for shorts. We are still in the waiting game. All you have to do is wait. Let's see what happens. Okay, price is breaking above this supply zone. That is still not a confirmation because this was a lunchtime rave zone. That is still not a confirmation for longs. We still have to wait for this zone to be broken or this zone to be broken. Let's see. Okay, price is coming down. And let me just check if this movement right here was a liquidity sweep or just a break. Okay, that this candle this week wasn't actually a liquidity sweep, it was just a more liquidity built up. And I spoiled the whole movement by switching to 15-minute chart because we could see the next candle. Okay, and as you can see, here's the liquidity line. And right now, price broke below this demand zone and swept the liquidity. So it perfectly swept the liquidity and reversed after the liquidity sweep. So as you can see, there's a aggressive rejection and V-shaped recovery. As you can see, this was a reaction on this demand zone. From this price broke below this demand zone, swept the liquidity to the downside, and here's a huge rejection, a V-shaped recovery after this sweep of the liquidity. So let me just check the 15-minute chart. I've already seen that. Yeah, let's take a look at this candle. Let's take a look at this candle. This is pretty tricky because as you can see, the wick came down to sweep the liquidity. This wick swept the liquidity from the downside, but actually the candle has closed below the zone. So there's a zone break. We can consider this as a zone break, but this could be also a liquidity sweep. So all we have to do is wait for a bias decisional supply or demand zone, but we can still take trades because this scenario is one of my favorite scenarios because I explained this in the earlier Wednesday webinar, and I'm usually taking these kind of setups when price sweeps the liquidity to the downside. And let me switch to the 1-minute chart. When price sweeps the liquidity to the downside from below a demand zone or a supply zone and reverse this immediately, and if it can change character on the last supply zone that was sweeping the liquidity, if it can change character to the upside, I will take the short or long continuations up to the next supply zone, which will be, let me just find it, this one in this case. As you can see, from this supply zone, a huge inefficient movement started to the downside, a break of this zone happened, and basically this is the origin of the whole order flow, of this 1-minute order flow that was leading to a liquidity sweep and break of this zone. So we got two scenarios here actually. We got two scenarios here. If price changes character here to the upside, I'll be jumping on a long execution here on this candle, or on the flip zone. If price creates a flip zone here, I'll be jumping a long execution. But if price doesn't come back down to mitigate the zone and just head straight up to this supply zone, I will skip trading on the supply zone. And here comes the third scenario. So sorry, the second scenario. If price comes up to this supply zone, I will wait for a reaction on this supply zone. And if price reacts on this supply zone, creates a change of character, I'll be jumping in a short trade. If price creates a break of this zone, I'll be jumping in a long trade. Okay, the third scenario, if price creates a liquidity for this zone, if price creates liquidity for this zone, for example, somewhere around here, a triple top or liquidity front line or double top, any liquidity, I'll be set a risk entry on this supply zone because we still can decide if it was just a liquidity sweep or a break, but it's more likely to be a break because price actually closed below this demand zone on the 50-minute chart, and the whole order flow has started from this candle. The whole break and sweep started from this candle, and if price creates a liquidity for this zone, that will be the perfect criteria entry, perfect criteria confirmation for the short. Okay, so let's see what happens. Okay, price actually changed character to the upside here, as you can see. It didn't even react on this zone. Here's a change of character to the upside. Okay, and yes, as I said, I will set an entry limit on this black because these are one of my favorite scenarios in this Forex game. Price swept the liquidity from below this zone with huge inefficient movement, broke below this zone. After the liquidity sweep, huge V-shaped recovery. As you can see, V-shaped recovery, change of character to the upside, and you can execute a long trade up to this supply zone. I'm taking these setups 99% of the time. So let's just take this setup on this backtesting session 2. Let's set an order limit on the 50% of this candle because I believe the full body entry will not be enough for the 2-pip stop loss. Yes, as you can see, we have to use the 2-pip stop loss 50% entry, and we are targeting this zone, and there is enough risk-reward ratio. So I'm only taking setups if it's above or just equals 5 risk-reward ratio, and this setup is above 5 risk-reward ratio, so we can take this setup. Let's see if it comes back to our entry point. Okay, it's actually coming back down to our entry point. Okay, we got tagged. Let's see what happened. Oh, okay, reaction. Okay, huge reaction. Very nice, very nice. So here comes the management part. How do we actually manage this trade? Just answer in the chat. How would we manage this trade? What are we waiting for? Break even after a breakout structure. Break even.
You want to take 80% off of the supply and then go for the sell?
I'm waiting for a liquidity creation, but just looking at the chart, actually price created liquidity here, as you can see. Here's liquidity. First tap, second tap, third tap, and it seems like this will be a fourth tap, or if it breaks above, the liquidity will be swept. So price actually created liquidity, just as I said. So I would risk a short entry here on this supply zone, on the 50% of this supply zone, and we can actually target the 50% of this candle if we are taking a short on the 50% of this candle. So let's set a risk entry on this supply zone, but I'm asking the trade management actually, and we will be targeting a realistic target. So should we set a break even in this price action? Is it too early, or we can just safely set it break even? Not yet, not yet, exactly. We are waiting for the break of this high. If this high break happens, we'll be setting our stop loss to break even. So let's play price forward. Okay, that's actually not a break. That's just a big break, and more liquidity is being created, as you can see. Here's more liquidity built up for this zone. And as I said, if price builds up liquidity for this zone, that will be a perfect criteria entry. Once again, let's track our criteria. Here's the first criteria, inefficiency. Second criteria, a break of this 15-minute zone. Third criteria, sweep of the 15-minute liquidity line here. Fourth criteria, break of structure or change of character to downside here at this point. Fifth criteria, liquidity creation. So basically, this is a full criteria entry. We can take this trade. I would risk this trade. But considering the fact that we are in a trade and we are setting the trade to break even, or okay, right now we are in break even, and considering the fact that we are in break even, we can take a loss here. If we book a profit here, we'll be able to take a loss here, because if this trade hits TP, that will be a 1-to-7 risk-reward ratio almost, and we'll be able to take a 1 risk-reward ratio loss. So we can take a risk entry on this supply zone regardless. Okay, so let's see what happens. Price actually swept the liquidity, and right now our stop loss is in break even at this point. Let's play price forward and just extend these zones. Where's the replay by? Okay, here. Okay, we are not setting the stop loss to this point because this will be a liquidity built up for this demand zone. So we are still keeping the stop loss in break even. Okay, liquidity sweep happened, as you can see. Price swept the liquidity from this region and reversed to the upside. Okay, right now I will set the stop loss under this low point, because this low point has no liquidity. This is not part of the liquidity. This candle swept the liquidity from this region, so our stop loss will be in this region. Let's see what happens. Sorry, play price. Okay, TP hit, and we are tagged into the trade immediately into the short. So basically we booked 1-to-7 risk-reward ratio on this trade. So if you take a loss on this trade, that will be perfectly fine. And let's see a target for this zone. Basically, price reacted on this supply zone. If price reacted in this supply zone and creates a change of character to the downside, there will be still this demand zone, this structure breaking demand zone. So I will be targeting this demand zone down here. And if this demand zone breaks to the downside, I will be looking for short continuation. So if this demand zone breaks to the downside, I will be targeting this one, sorry. If this demand zone breaks to the downside, I will be looking for short continuations to the downside. And if this demand zone holds, that means the demand chain holds and the liquidity is being swept from this region. So if this demand zone holds, I'll be expecting the continuations up to this supply zone, because we have this supply zone still up here. Okay, so we got our targets set. We got our plan. So basically our plan is to wait for this trade to play out, and if price taps this zone and creates a change of character to the upside, we'll be targeting this zone up here. If this zone breaks, we'll be targeting lower demand areas. That's our plan. Okay, huge reaction. Okay, we might be swept out. Reaction. Okay, perfect reaction. If this low point breaks, I'll be setting my stop loss to break even. Okay, that broke, and actually TP hit. So we booked 6 risk-reward ratio on this trade also. And as you can see, price reacted on this demand zone. Let's see what happens. So as I said, if price changes character to the upside, this supply zone will be a change of character. If this supply breaks, that will be a change of character to the upside. So if price changes character to the upside here and creates a demand zone, I'll be executing long trades up to this supply zone. If this demand zone breaks, I'll be executing short trades down to deeper demand areas, because basically this is our bias decisional demand zone in this case. all we have to do is react on this demand zone. This is our bias decision of demand zone on the 1 minute chart. Let's see what happens. Okay, it broke actually. Oh, that could have been just a liquidity sweep. Okay, that's a break. That's a break. Okay, perfect. I'm just setting this supply zone here as our entry point. And as you can see, price actually broke below the, just weak below the structural low point. So basically, this is our strong high point, weak low, strong high. And this is not a strong high yet because it couldn't break below the weak low yet. It just created liquidity. Let's see the next candle. Okay, it just broke below the weak low. So this is a strong high here. And this demand break and the overall weak low break happened from this supply zone here. So if price creates liquidity for this zone, that will be a perfect setup. But I will just raise the entry on this supply zone, because that's what I said. If this supply zone, if this demand zone breaks, I'll be setting an order limit on the supply zone that was causing the break of this demand zone. If this demand zone gives reaction and changes character, I'll be setting a limit on the demand zone that caused the change of character. So as I said, I'm setting a limit order on this supply zone and the 50% of this zone, because I believe the 2-piece stop loss won't be able to cover the whole zone. Yes. And we'll be looking for realistic targets if we get tagged in. Okay, price reacted on the supply zone. Price reacted on the supply zone. As you can see, here was the first reaction, tap the supply zone, reverse on the supply zone, and couldn't break below the last structural low point. So it couldn't break below. Instead of breaking below, it just broke structure to the upside here. It's a minor break of structure. Let's see if we get tagged in. This could be liquidity built up for the zone. Okay, we are in the trade and we are out of the trade. Okay, this is a loss. This is perfectly fine. We already booked 7, 6. So we already booked 13 risk-reward ratio minus 1. That's 12 risk-reward ratio. All we have to do is adapt. We'll just close this zone and delete this zone. And let's see what is happening actually on the chart right now. This could be our next supply zone right here, as you can see, because this could be the origin of the whole order flow that was leading to a break of this demand zone, as you can see, because from this supply zone, price actually broke below this zone with weeks. So this could be your next supply zone. I'm not setting an order limit on this supply zone because price actually changed character to the upside and broke above this supply zone, and basically demand is in control. So I will be waiting for the break of this supply zone. If this supply zone breaks, or here's another supply zone. So I'll be just waiting. Let's see what happens on chart. Price is reacting against supply zone, building up liquidity, sweeping the liquidity actually. As you can see, here's the liquidity. Here's the liquidity, and this movement swept that liquidity. So let's see what happens next. My bias is still bearish, because if price reacts on some supply area right here, or just reverses here and creates a change of character, I'll be entering on a short, because as I said, this is a strong high, weak low, strong high, weak low. If that will be a weak low, if this low can break above this high point. And if this low can break above this high point and creates a change of character somewhere around here, the short trend will be continued. You always have to map out your structural low and high points, your structural weak and low high points. So if a change of character will happen, I'll be hopping in a short trade. And if this zone breaks, this upper supply area, this basically strong high point breaks, I'll be looking for a long opportunity still up to this target point, still up to this supply zone. So we still got our target points set. We still have our plan. Let's see what happens. Price is reacting on this demand zone actually. Okay, and the change of character happened, liquidity sweep happened perfectly. As you can see, here was a liquidity trend line, and here was a change of character, here was another change of character. So basically price changed character on several places with inefficient candles. So I'll be setting an order limit on this supply zone. And why am I setting an order limit on this supply zone? Basically, the reason I'm setting an order limit on this supply zone is that we already booked 13 risk-reward ratio. Considering this loss, we already booked 12 risk-reward ratio this session. So I'll be able to execute a risk entry here and follow the overall order flow, which is bearish in this case, because as you can see, the overall order flow is still bearish. still bearish, and price just broke below this 15-minute really strong demand zone, because this demand zone created huge inefficiency, swept the liquidity, broke the 4-hour zone, blah, 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 blah. And the order flow, this downside order flow, this bearish order flow, was being able to break below this demand zone, and it's being able to create strong highs. Why can't I just draw? It's being able to create strong highs, weak lows, strong highs, weak lows. And as you can see, price just reacting on a strong high. This is a strong high reaction right here. And after a strong high reaction, price change character to the downside. So I'll be setting an order limit on the 50% of this candle, because I believe, yes, this is a weak entry zone. Why am I saying that this is a weak entry zone? And why we are using a gam box here and the 50% entry? I'm just asking you guys. Guys?
Because the candle is too big to cover the 2 pip stop loss.
Exactly. Because the wick is more than 50%. Exactly. Exactly. Let me just check the Discord, please. Just a minute, guys. Sorry. Dominic, could everyone join?
Yes, if they wrote their name, the question, so I let them in.
Perfect. Thank you. Thank you. Thank you very much. So let's continue the backtesting session. So we were setting an order limit on the 50% of this candle, and basically, yeah, the 2 pip stop loss is being able to cover the whole zone. Let me just adjust this zone a little bit on the 50%. Okay. So it's being able to cover the whole zone. Perfect. Let me just see. If price creates a liquidity for the zone, that will be an extra confirmation, and this trade would work out 100%. But I'm still taking the trade without the liquidity creation, because as I said, I'm just following the order flow. Order flow is king. Order flow is the best indicator in this game, right? All you have to do is follow the order flow, the higher time frame order flow. Okay, so let's see. Let me just find a realistic target. Basically, we can't really find the demand zone in this region. I won't target the weak low. Let me just find the 15-minute or 5-minute zone somewhere around here. Oh my God, the 5-minute. Let me see, because the 15-minute is messy. The 5-minute is also messy, as you can see. This region here is pretty messy. You can't really identify a good demand zone. Only maybe this one. This could be a good demand zone for a target point. Or the downward 4-hour demand zone could be a good target point. But let's just stick to this demand zone. Let me just double check again. Yeah, there are no other demand zones, only this one. Let me see. But yeah, this one has been already mitigated. And yeah, this is an extra confirmation. Okay, let's see. Let's see. This demand zone will be a 1-to-20 risk-reward ratio. So I will not let my position run for 1-to-20 risk-reward ratio. I will basically close my position at 1-to-10 risk-reward ratio, because I'm hard tipping every single counter trend trade at 1-to-5 risk-reward ratio, and hard tipping every single pro trend trade at 1-to-10 risk-reward ratio. There's no point to let the trades run and take pressures and stuff. I'm just hard tipping stuff. But just for testing out, let's just see this downward demand area. Okay, we are not tagged in. Okay, we are tagged in. Okay, almost swept out. Oh my God. Oh my God, we have almost swept out, and we are still in the trade. Almost swept out. Okay. Oh Jesus. Okay. Did it actually keep us in? Yeah, we are in the trade. We are in the trade, guys. Okay, let's just manage this trade. It's just a huge reaction. Okay, I will set my stop loss to break even right now, because price just broke below the last structural low point, as you can see. Because this was a structural low point, it couldn't break above the last structural high point. And why am I saying, and why did I know that this will be a structural low point, weak point? I knew it because price reacted on some sort of supply here, maybe a second supply, or on this supply zone, I don't know, and changed character to the downside here and swept the liquidity to the upside. And after a liquidity sweep to the upside, it just changed character to the downside. So basically, if price changes character on a strong high, that means price is not strong enough to break above this strong high point. And if it changes character on a strong high point, that means the continuation of the overall order flow will happen. And as you can see, the continuation of the overall order flow has happened. Let's just manage our trade. Okay, it's pulling back. We are in break even. We might be stopped out at break even. Okay. No, not yet. The small break of that structural low has happened, as you can see, but the break only happened with candles, wicks. So this is not a break of structure to the downside yet. So I will still keep my stop loss in break even because these zones could be liquidity for some supply area right here. So I'm still keeping my stop loss in break even. Let's see, the sweep is happening. Okay, more liquidity built up. On the downside too, as you can see, here's liquidity for the upcoming shorts. So there could be a reaction on this supply zone. Actually, let's see if there's a reaction on this supply zone. I'm just setting an order limit. Let's see if the 2 pip stop loss covers the whole zone. Okay, I would use the 50% because it barely covers it. Let me just check the gambucks. Okay. So it's a position in position trade, a scaling trade, basically. Let's see what more liquidity is being built up, more liquidity. And we are not tagged in yet. And the breakout structure happened to the downside. Okay, this trade wasn't tagged in. So we're just keeping the original order, which is running pretty well. And I will set my stop loss above this high point right here. As you can see, this is the less structural high point, less structural strong high point that was being able to break below the less structural low point, weak low point, which is this one, because the order flow is still being continued, as you can see. Let me just mark it out once again. Strong high, weak low, strong high, weak low, strong high, weak low. Yeah, strong high. No, sorry, not the strong high. This couldn't break below the last weak low. So basically, in this case, this is our strong high. And let's see if a weak low forms. But actually, the session has closed. The session has closed right here. So I will be just hard tipping my trade at 1-to-10 risk reward ratio. And this will be the 1-to-10 risk reward ratio. Let's see if it hits TP. Okay, it did hit TP. I just did this because the session has closed. As you can see, New York session closes at 5 p.m. right here. And I'm basically closing my positions or hard tipping them at 10 or 5 risk reward ratio when the session closes. So yeah, I just hard tipped my position, but let's see if it runs down to your TP. I'm just interested in if the direction is good. It's running pretty well. Okay, and TP hit. Okay, perfect. Our target point would have been hit, but as I said, session has closed. I'm a session trader. I'm basically almost closing my positions at hard TP if the session closes. So yeah, let's count the positions and let's count the risk reward ratios. Here was a 7 risk reward ratio, 7. Here was a 6, and plus 10 minus 1 equals 13, 12, 22 risk reward ratio, basically in this New York session, which is a pretty good session. And this session has closed. We are chilling with our 23 risk reward ratio booked in our pockets. So yeah, these were the opportunities for this New York session. Let me just know if you get any question, guys, about the trades, about the risk reward ratios, about the management, anything, just let me know. You can use your microphones, please, or just type in the chat. Everything was clear. You could understand everything. No questions.
Hey, Marcel, if I may ask one question.
Hey, man, of course. Go ahead.
Okay. I'm totally okay with the 15-minute POI, waiting for the change of structure. But for the last 2 trades that you showed just now,
you mean
I
this
was
one?
wondering, no, the trades that you actually took, and in terms of looking at the order flow and the market structure, it was just, I'm just trying to be clear, if it was just because it broke the POI on the 15-minute that you were biased to be bearish, and then looked at the basic order flow for those sales.
So basically, just take a look at this. Price swept the liquidity from over this supply zone, from about this 4-hour supply zone, right? And at this region, price changed the order flow. Changed order flow on the 1-minute chart and the 15-minute chart. I believe this was a 15-minute change of character to the downside, and price started to build up a bearish order flow in this case, as you can see. And as I said, I was waiting for a reaction on this demand zone. If price would have created a 15-minute change of character after the tap of this demand zone, I would be aiming for long opportunities, and my bias would have been bullish. But as I said, if price breaks below this demand zone with a 15-minute candle, with a 15-minute body closure candle, then my bias will be bearish, because the order flow is still being continued. If price breaks below this demand zone, this huge demand zone, this is a pretty valuable demand zone, as you can see, created huge inefficiency, swept liquidity, broke 4-hour supply zone, broke structure, created liquidity, every single criteria is fit. So as I said, if price breaks below this demand zone with a 15-minute body closer, and not just a liquidity sweep week, then my bias will be bearish. And the exact same scenario happened because price broke below this with a body closure candle, and the weak high, the strong high was being respected here, as you can see, and the order flow was being continued over and over again. Just look at the order flow. Look at the order flow at this region. It's bearish. If this demand zone gives you a reaction, then the order flow will be changed to bullish. If this demand zone breaks, then the order flow, which is bearish, will be continued. Make sense? Okay.
Yeah, definitely. One follow-up though. We have a well here. You said we had a bias. Once it breaks below that POI on the 15-minute, we had a bias to be short.
Exactly.
Could you go over the first buy trade? I just want to know the reasoning behind it, because you said, it's something that you take all the time.
Yeah. I usually take these setups because we had the liquidity. As you can see, we had the liquidity here. Here's a perfect liquidity line. On the 15-minute chart, let me just switch to the 15-minute chart. On the 15-minute chart, which was that candle? This was that candle. This candle closed below this zone, as you can see, closed below this zone. And this was our bias decisional candle because it closed below the demand zone, but also swept the liquidity. And after a liquidity sweep of this overall liquidity line on the 15-minute chart, after the liquidity sweep, price reversed immediately. As you can see, here was a liquidity sweep, here's a liquidity line, price swept the liquidity and created a huge recovery to the upside. So basically it's coming down, sweeping the liquidity, collecting all of the orders at this region. If the orders are being swept, if the stop losses are being triggered, what will happen? More buy positions will be placed in the market. More buy positions were placed in the market. The order flow in this region shifted to bullish because it changed character to the upside. But the overall order flow, the overall higher time frame order flow was still bearish. So that's why I'm taking these kind of setups up to the less recent supply zone. In this case, the less recent supply zone, because the liquidity is being swept. The orders, the stop losses are being triggered in this region, changing character to the upside after the liquidity sweep. And if price changes character, you will be able to execute a long trade up to the next strong high. This is a counter trend trade. This long trade was a counter trend trade. This short trade is a pro trend trade.
Okay.
Make sense?
A lot. Thanks.
Okay. Bro. You're very welcome.
So, added blessings, man.
Hey, man.
For the pro trade, that's the down. You didn't wait on a confirmation there. Is it because you would already in profit?
This was already a confirmation entry because price changed.
No,
changed.
The first one.
The first short.
Yes. Yeah.
I even said that I'm taking this short opportunity because we are already in profit, and the full criteria was fit. Because here's the first criteria, inefficiency. Here's the second criteria, change of character or break of structure here to the downside. Third criteria, break of the 15-minute demand zone. Fourth criteria, sweep of the liquidity. Fifth criteria, change of character to the upside. Sixth criteria, liquidity creation for the longs. So basically all of the criteria were free. That's why I was being able to take this trade. because every single criteria was fit, right? This was a risk entry also. This was a risk entry because basically demand was in control. This was a risk entry, but if it has so many criteria, 6 or 7 criteria, I'm willing to take the risk, even if I'm in profit. Make sense?
Yeah, I understand.
Okay, perfect. Can you mark out the change of character used on these? Yes, of course. Here's the first change of character, as you can see. This is a change of character because this was the last supply zone that pushed price to the highs. I'm in lows, and this movement changed character to the upside here. This supply zone changed character with the overall order flow here to the downside, as you can see, because from this low price change character here to the upside, here was an upside change of character, and from this supply zone price change character to the downside, changed back the character from bullish to bearish here. So basically, this is our overall character changing supply zone, and this is our minor character changing demand zone. And on the third trade, basically, as you can see, these are demand zones. These are seconds demand zones, not valuable demand zones, but these are demand zones. And price from this supply zone, as you can see, reacted on some sort of demand zone, reacted on this demand zone because it had small inefficiency. It reacted on this demand zone. And from this supply zone, it changed character to the downside with inefficient push, created liquidity, swept the liquidity, reversed. In the last trade, why didn't we use the one higher order block? Which one? This one right here? Because that did nothing. The reaction was given by this supply zone. As you can see, this candle reacted on some sort of demand zone, either on this one, either on this one. It had a reaction. And from this candle, the order flow has shifted to bearish from bullish. This was the character changing supply zone in this case. This literally did nothing. It just created a downside candle. This candle reacted on some sort of demand zone, and from this candle, the order flow was shifted and the character was changed. So basically, this is our character changing supply zone right here.
Marcel, can I ask a question?
Of course.
Sir, we are not taking into consideration when we trade the spread. So you are using the 2 pips stop loss.
Yes.
You don't take into consideration the spread.
So basically, in this scenario, if we had a spread, we will just have to add, for example, if the spread is 3, we just have to add the 3 ticks to our stop loss.
Okay.
That will keep us in.
It will be safer. Yeah, sure.
That will be safer, of course. But I don't know the spreads because I'm not seeing it real time. You know, I'm not seeing it real time. I'm just backtesting, so I can't add these spreads on the backtesting session.
Okay. Thank you so much.
You're welcome.
But usually in normal trading, we should take it.
Yes. I'm always buffering my stop loss and entry point. I'm always buffering it because if you have a spread, you have a chance to be missed out or be tagged out from the trade too early because of these spreads. That's why you have to buffer your stop loss if you're taking a short, and that's why you have to buffer your entry point if you're taking a long.
Okay, thank you so much.
You're welcome. So we don't have to wait for a 15-minute change of character and then a 1-minute change of character and enter a trade. I didn't say that. We have to wait for a 15-minute change of character if price creates a 15-minute change of character on this demand zone. We have to wait for a 15-minute change of character, and inside of that 15-minute demand zone, we have to wait for a 1-minute change of character also. And if price breaks below this demand zone on a 15-minute chart, that will be a confirmation. So a 15-minute break of this zone happened. That was a confirmation. Guys, I will just stop the recording because I usually do not record the question and answers. So you'll be free to use your microphone. I'm stopping the recording right now.